Hey everybody, it's Pete Thorpe with the State Line Group of Real Broker, and today we are talking interest rates. I've been meaning to make this video for a while, and now seems like a good time to do it because the Fed just came out with an announcement that they plan to raise the rates even further. So let's go ahead and get into it. This is for buyers and sellers because the interest rates impact both parties. Right now, people don't buy a home based on the price point. They buy the home based on a payment amount, which leads them to their price point. They speak with a lender to figure out what they're qualified for, where they want to stay with their price point is based on what they want their monthly payment to be. So at the beginning of the year, we started out at 3.25%. As of today, in the last week or two, we've been sitting at 6.0%. Sometimes a little below, sometimes a little above, depends on the lender you're with. But the Fed has come out and said they're going to keep on raising the rates. So those rates are going to go up. So what I wanted to do is show you how that impacts the buying process and the selling process. So we're going to go ahead and pop open a pretty typical listing here in New Freedom. So right here you can see we've got this nice end unit townhouse that's currently listed at $295,000, and we're going to go ahead through the buyer purchase estimate. So we have a tool that lets us give an estimate. We're going to go ahead and typically, you've got a 4 to 6 weeks for your FHA loan, so we're going to go ahead and just say this is July 29th for a closing, and the old interest rate of 3.25%. We're going to move this to an FHA loan, and we're going to call it for the frustrated buyer because they likely were frustrated and getting beaten out by multiple offers over the asking price just a few months ago if they were in the market then. So as you can see here, that brings their payment to $2,034. That doesn't include homeowners insurance, so realistically, this is probably actually about $2,100. So the buyer wants to stay at about a $2,100 mortgage payment. With a 6% interest rate, what does that get us? So we were at 3.25. You see it's 2,034 right there, 6.0, and our payment goes to 2510. Nearly $500 increase, not including the homeowners insurance that's missing, so really it's probably closer to 26. So call it a good $500 increase. So buyers don't want to have that payment, which means they need to adjust what they're looking for. So they were looking at $295,000, $300,000 townhomes or single-family homes here in Southern York County. If they hop over the line into Maryland, you're talking $500,000 homes, but the payments are going to be relatively close to each other because of the difference in taxes. That said, what do they have to look at now in order to keep their payment around that 2,100 point? So 295, you would think, 275, 250 maybe? Nope. They got to go all the way down to $230,000 at 6% to keep their payment right around $2,100. So this is becoming a pretty big adjustment for people to make. Buyers were looking potentially at nicer homes at a higher price point, and now they may have to adjust their expectations and come down a little bit and look at homes that fit the budget that they're looking for. On the sell side, you're not seeing dozens of offers come on a house that hits the market today. Everyone is expecting, they've been told across the board, all across the country, that houses sell in minutes, and yes, they were. They absolutely were selling quickly. They were going for over list. People were offering appraisal gap coverages. They were waiving inspections. That bird has flown the coop. That is not happening unless you've got a perfectly priced house in a very, very hot neighborhood that people are dying to get into. And even then, people now still expect an inspection, which they should have been from the beginning anyway. At the very least, as is, you should never waive your inspections. People aren't necessarily offering that appraisal gap coverage because why would they want to pay extra money if they don't need to? So sellers need to look at their expectations and say, okay, it's going to take a little bit longer to sell my home. I'm not going to sell it in the first weekend like everybody was just a few months ago. At the end of the year, you could put a house in the market, stick a sign in the ground, and you'd have offers. That is gone. You need to actually market the properties now. And even then, you are still going to not necessarily be fielding 10, 15, 20 offers for crazy numbers with crazy contingencies. Those are gone. So we have a little bit of a tug of war going on. Factor in also that at least on the Maryland side, in Baltimore, schools are closing this Thursday finally. So you had people who were down, say, in Ocean City for the air show this weekend. You've got school wrapping up, so everyone has kind of put their search on hold. They're going to wrap up school. They might even go on a vacation after that, come back, reassess, get themselves situated, and then restart their hunt. So what you've got is a little bit of a dip right now in the market, which is expected. And if you look at the historical trend that has always happened around this time of year with school letting out, summer starting, and everyone kind of getting into their groove. But this year is going to be different, mainly because of that interest rate hike and more to come. So if you're a seller, you're going to have to take a look at what the market is currently doing, make sure you're priced appropriately, and have reasonable expectations about how quick or not quick your home would sell. We used to be on the market for quite a while before selling, anywhere from 3 to 4 weeks before you went under contract. That was 2019 going into 2020. The pandemic hit, and once we reopened and started reopening, everything was selling in minutes. That is not the case anymore. On the buy side, if you have been looking for a few months or even at the end of the year, and now you're kind of getting back into it because you were frustrated with being overbid by tons of other people, you're coming back into the market. You do need to get with your lender and reassess what your payment is going to be and where you should be looking based on the new interest rates. So when a lender may have quoted you at 3.25, they might have even quoted you at 4, 4.5. However, rates are now at a 6. So if you look at your quote that you got from your lender, it always says rate subject to change based on the market. You're never locked in until you're under contract and your lender tells you you've locked your rate. So keep an eye on all of those things. Keep an eye on the market. If you're a buyer and you're looking to purchase, make sure you regroup with your lender. If you're a seller looking to sell, take stock of what the market is doing right now. And if you have an agent that comes into you and says, oh, I'll sell your house on a weekend, the market is insanely great, they're just trying to buy your listing. They're not giving you the truth. You're going to end up being very disappointed, mad at them, and you're not going to get your house sold in the time you'd like to get it sold in. If you have any other questions, if you'd like more information, feel free to reach out. You can reach me at pete@statelinegroup.com or by phone at 443-347-5334. Hope this was helpful. Look forward to giving you more educational content as we roll into the year.